Put this to somebody who looks at data, technical, on the futures and options side, global markets. I mean, pretty much everything quite closely. Rohit Srivastava is with us now. He's founder and strategist, IndiaCharts.com. Rohit, good to have you with us here. Thanks very much for your time. So that's the question, isn't it? If you're trading and the next move up or down makes a difference, then you got to wonder: are we at a bit of a turning point, or this just continues? And wanted your thoughts there, Rohit. What do you think?
I found your last comment interesting. Do you fear fear itself? So what I think here is that sentiment is really gone to the other extreme, which is excessively bullish. I don't think anybody is fearful right now. Some fears probably existed prior to the Fed's recent statements that they will start thinking about lowering interest rates, and just making that statement has made most of the world fearless as far as equity exposure is concerned, which can be seen in various indicators now reaching, in some cases, multi-year highs. And that simply shows the over-optimism of the market heading into January 2024, which is seasonally, January is a weak month for the year, which means almost 7 out of 10 years have been negative, even though the average return is zero, because some of the positive years have also been pretty much big on the upside, which net just tells us that January is always a big move up or down, more often down than up, and therefore there may be a big opportunity in terms of the trade right there. And what should be the trade be? I would think contrarian, because if the indicators are flashing red in terms of everybody being over bullish, the odds are probably for a downside play in January. So that is what you need to prepare for. The only thing is we haven't reversed course yet, right? The market is still going up, and you might make the seasonal high only sometime in the first week of January. So you need to patiently wait for that market turn. But I do think it is coming. There are various indicators pointing in that direction, which I can just list out.
But for example, the point, Rohit, though, is that timing it, and then the question becomes: is it going to be worth it to time it, make all the effort to? Because it has to be sustained, right? It has to be, and it has to be large, worth the effort in that sense. Take last Wednesday as an example. It was a one day out of the blue kind of cut which came, and then we've recovered past those highs and beyond very, very quickly in 4-5 days since then. So just your thoughts.
No, but so, which is why I mentioned, December is not the month to look for those big moves. January has seen big moves in both directions. So we can, even though, like I said, if the average is zero, I can actually if you take the average of down months, it'll probably be 4% minus. If you take the average of up months, it's around 5-6%. So you've got significant moves in either direction that can play out just based on averages. Can it be more than that? Yes, there are certain years which are bigger. So now it's a call. How do you really position yourself for that kind of risk? How much cash do you create? And as a trader, there's actually a short trade waiting to happen. So we always recommend position sizing. It's not that you go out and do 100% on day one, but you do something like I'll start with a 15% position, and then I will add to it as and when I get a confirmation from momentum, from Dow theory, from moving averages, trend line breaks. Everything that technicals teaches us allows you to build on it. So that you are able to take that trade properly. So that execution is a completely different subject. But I do think there is a good trade on the downside that you will get in the month of January that you should try and position for.
Well, you said that one should position themselves for, or prepare oneself for, a bit of a downtick in January after the heady run that we've seen in both November as well as December. How does one position oneself? As in, do you suggest one take short positions? Do you suggest one trim the profits that, or book some profits of the trades that they've made so far in November, December? And if there is a downside, what are the levels that you're looking at in terms of attractive levels for base formation here and re-entering from a long standpoint?
So we can start with a minimum, which is like a 4-5% thing, which may not really concern people much. But I am keeping the door pretty much open. I don't know whether it's going to be 5%, 10% or 15%, because that's a don't know. It will give us a better sense, I think, after it happens on the big picture, what is really going on. The right thing to do, though, is when you get this kind of a bullish extreme and everybody's buying and it's easier to sell, is why not create some level of cash as a starting point? Now that is for investors, because if you don't create cash, how do you buy the dip? So people always talk of buying the dip, but you need money to buy the dip. If you're fully exposed, then you don't have any money to play with in the first place. So investors, I definitely think, need to start thinking about how much cash to create. It can be a different number for different people, and it can also be increased or decreased as you get further confirmation that something bigger is turning, or whether it's just a short-term correction and you just reduced size, managed risk, and you get back in. So that decision making is easier when you execute rather than you just try to imagine that, oh, what is that number going to be? Now, for traders, it's about adding and building, like I just mentioned. Traders, I don't think, should carry any long position over here in any case, because if there's so many over bullish extremes, just to list them out, you have the VIX rising with the Nifty. The last time that happened was October 2021, and after that, for 9 months or so, the market was down, and it took more than a year to really take out that high. So that is, you have a similar setup right now between the Nifty and VIX rising together. You have a currency that has been perpetually weak throughout this time. Even though the dollar index has fallen, you don't see the USD INR going down much. It bounces back on the smallest thought of going up. You have Nifty premiums at an all-time high, 200-point rollover cost between the spot and 2-month futures, which you will be rolling into for January, is the highest on record that we've seen. And though I mentioned it in point terms, some people start saying, why not look at it in percentage terms? The result is the same. It's going to be around 0.92%, which is also going to be the highest on record. So that is a high. And that simply means that people are too bullish and want to carry forward longs, paying a bigger premium than they did historically. The direct impact of that is probably also on the VIX. And lastly, I can mention, you have client positions which have reached a new all-time record since 2017. So you have the largest short position on the client side in index futures since 2017. So that's another extreme. I think the last one could be volumes, which is, volumes are close to the highs, which we've seen. More than 4 million shares traded on a daily basis on average is something we've seen at all the short-term to medium-term peaks of the last couple of years. And by that, I mean a top that can last for a couple of weeks to couple of months, depending on the scenario. So all these things put together do tell you that you're at a point where you position out of longs and start building shorts. You don't do it all at once, but you start looking for that opportunity. Like I said, we usually start with 15% and then add it up as you get further confirmation of a trend reversal.
Rohit, just 2 more points. One, the 2 instances, January that you mentioned, where markets were up, and then when they were up 5-6%, right?
Yeah.
When did they? What was the backdrop to that 5-6% move in January? Was it very weak markets before? Was it very strong markets before coming into those 2 Januaries?
So usually, I think it always involves having a strong period. So whenever you have strength in the previous 2 to 3 months, that is when the reactions in January are stronger. Otherwise, not necessarily the case. Say, for example, last year, 2023, but 2023, it was a down month, even though we peaked in sometime in December itself. But if you go back to some of the other years, it often will be preceded by a rally in the previous month, that is the December of that year, and that may just not have carried through into the next year. Like 2021, you were up 2.2% in December, and in January you were down by 1.75%. So you've seen those kind of events.
And just one last point on global, any definitive view, or no? It's okay.
So global markets have seen shorts starting to get built up again. We had seen all the shorts reduced, by October or so. I think you'd actually seen the CFTC futures positioning going back to the long side marginally from what was the highest short position in a decade if you went back all the way to May. So I think post the debt ceiling announcements, all the shorts got reduced on the S&P futures. Now you actually, in the last week, there was a jump of more than 100,000 contracts short on the S&P futures. So now into this rally, I think traders are beginning to add shorts back, which is sort of a sign that contrarian bets are being taken on the market. We don't have a trend reversal yet, but you also have the put call ratio, which has eased from what was the highest since January of last year, which was a bottom at the October lows. Now it's probably eased all the way back to a 0.9, 0.8 something, which is been associated with a lot of the medium-term tops. So, but yeah, I don't have many more data points to really say. There have been certain sentiment surveys that I've looked at
Right.
that do show, a 1-year high. For example, the AI investors intelligence surveys, which show that a lot of more traders are bullish than investors rather are bullish than bearish in terms of the cash that they're holding on their portfolio. So there are various measures, but of course, again, in the US, we need an actual price reversal to confirm, the trend turning from up to down.
Okay, Rohit, we'll leave it there. Interesting conversation, and thank you very much. I reckon this would be the last of our interactions on the air in 2023. So, Happy New Year, and we'll see you back in the new year in 2024.
Thank you very much to you and the entire audience. Happy New Year.
Thanks very much. Well, we'll take a quick commercial break here. I think we'll and come back. The market's still up 70, 80 points on the Nifty. But there is more coming up in just a bit from now. Stay with us.
CNBC-TV18, embarking on a quarter-century of excellence.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.